First Trades, presented by BSC, Investors Protection Fund.
Welcome back. You're watching First Trades on Bloomberg UTV India. The SGX Nifty trading pretty flat at this point, indicating markets could see a little bit of a slower start. But talking to discuss the market outlook, Dhananjay Sinha from Emkay Global Financial Services is joining in this morning. Dhananjay, morning. Thanks for taking the time out today. Let's try and get some perspective going as far as the markets are concerned. As we kickstart the expiry week, what's your outlook in terms of the near term?
Yeah, I think everybody is waiting for the BJP's Prime Ministerial candidate to make a statement on how he thinks he will take the economy forward, and there is a lot of expectation around that. So I think that's what is the key event for this week, and generally people are. It's a consensus trade actually that BJP will is expected to actually win the election, and the market seem to be pricing in a situation where BJP and NDA together gets more than 220 seats. So in the general election, so I think the market is geared up as a consensus trade towards a situation where the BJP will come to power. The underlying expectation is that if that happens, there will be more investments, more reforms, better growth. All those things are being priced in. I think this is basically pricing in the outcome ahead of the event. So I think that's the general mood in the market.
There's only one sector which everybody is keeping an eye out for today is the power sector. Just getting in some flashes from Adani Power as well, and what they're basically saying that CRC's fixed tariff methodology for the Mundra plant is what we've been hearing in. They're also saying that the company welcomes the regulators' methodology is what we're seeing right now. Clearly, there's been a lot of positive news flow from the CRC as far as Tata Power and Adani Power are concerned. What are your thoughts, and what do you make of the upside and the potential for these companies now?
Yes. Yeah, I think as far as Tata Power is concerned, on the news that came in during the weekend, I think there is an upside and the market would react on the positive. Over the last 1 year, we have seen many such steps being taken. You know, it started with the restructuring of the SEB loans and increase in power tariffs and some of these mining sector things that have been there. So I think there should be a certain positivity coming from the mining sector. This is a sector which has been languishing for quite some time actually. So I think there is some positive news trickling in here.
Dhananjay, is there a thought that this could actually be somewhat of a pass for a precedent as well for some of the other companies? Because Reliance Power also had the similar issue out here in terms of project at Krishnapatnam itself. You think this order that we've picked up from CRC would be a game changer for some of the other companies as well?
Possible. It's a possibility. I think quite clearly we can actually see a string of such measures happening. So one can actually be somewhat positive on some of these trends going forward.
From power to the other space that's been in focus for the last couple of days, Dhananjay, has been the banking pack, and it's been extremely volatile there. The kind of news that we've been picking up has been extremely negative in terms of the kind of developments may be at a specific bank like United Bank of India or the entire NPA debate as well. What are your thoughts? Because the stocks seem to be getting a little active on Friday also. The bank Nifty shot up a little bit. But how does one look at the banking sector in the near term?
No, I think as far as the banking sector is concerned, the market, there is a market view and a fundamental view. As far as the market is concerned, as I said earlier, there is a certain amount of optimism with respect to for the political outcome, and hence there should be what you see as banking sector stocks moving a little bit, I think is taking heart from there. But as far as fundamental is concerned, we are of the view that the banking sector, fundamentals are weak and likely to remain weak. and the recapitalization required for the banking sector is very, very strong or very large. We had been saying earlier on that the recapitalization requirement for the banking sector is over 2 lakh crores, and recent studies from the IMF and other studies are showing that it is even higher. So I think I don't see that being resolved in the near future, irrespective of whether it's the current government or the next government, and whether the market's expectation about political outcome turns out true. So I think the fundamentals for the banking sector is clearly linked to the asset quality issue and the accumulated requirement as far as the recapitalization is concerned. And we'll have to see how the government manages this. Till such time, I think the impairment issue for the banking sector, especially the PSU banks, remains.
In fact, the rupee is, the currency is open for the day as well. A stronger base, 62 to the dollar is where we're trading. Remember, we've seen a lot of strong bids coming in for the auction that we saw on Friday as well. There was a 14-day repo that we saw, and the rupee is significantly on an uptick today. 62.30 now, it's going back down. So it's been a bit of volatile as well. The yield should come up in just a bit as that market gets active as well. NS Venkatesh from IDB Bank joins us. Venkatesh, thanks for joining in this morning. Good morning. How's the week looking to you? Truncated week last week as well for the currency. What are you watching out in terms of data points except the GDP?
GDP, essentially, we believe that it should come at somewhere around less than 4.9.
How do you see the rupee behaving then in that context, Venkatesh, given the fact that the official projections are much higher, and to make the kind of numbers the government is talking about, we'll have to clock in at least 5.2% to be able to make a 4.9 for the year ending. How do you see the markets reacting to a GDP number that could be subpar?
Essentially, if you look at it, on the GDP numbers coming in weak, definitely the equity markets will also face some pressure. That compared with the external factors where we are seeing the other markets are also not showing that great signs. It will definitely put pressure on the rupee. I believe that, and this week being a very truncated week, and not much flows we are seeing, the month-end oil demands will always be there. So to that much extent, rupee will be under pressure.
What about yields then, quickly then, Mr. Venkatesh, where do you see yields? We saw that very successful auction. So liquidity slightly on the tight side ahead of the advance tax numbers in about 2 weeks?
Yeah, that in any case, the central bank has been telling that they will definitely provide liquidity to tide over whatever is the advance tax outflows by means of maybe a term repo only. So to that much extent, liquidity should be, I would not say comfortable. Liquidity will be tight, but it will not be very tight as we have seen in the last year, the same period. For the simple reason, the loan book growth of the banks are also not that growing aggressively. So to that much extent, the credit demand is a little bit muted, which will not put that much pressure on the liquidity. Having said that, I believe that the yields should more or less move around, say around 875 to 880 levels.
All right. Thanks for that, Mr. Venkatesh. So obviously, that's the call coming on the money markets, but power seems to be the big talking point this morning as well again.
Definitely, power is going to be something to watch out for. Just in the pre-open, Tata Power and all these stocks seeing a little bit of excitement, up around 5.3% in the pre-open. We're going to discuss that in just a minute from now. But Dhananjay, just a couple of closing thoughts out here. What are you advising clients to do right now in the Indian market? What are you advising in terms of sector allocation as far as clients are concerned? 2 sectors that you're overweight on and some sectors that you're looking to avoid.
Yeah, so basically, as expected, the earnings growth and top line growth are visible strongly with respect to the export-related, export-dependent sector. That's visible also in the Q3 numbers, and we are overweight that. So we are, we will continue to buy, the IT space on every correction. I think. We have been overweight there, and recently there has been certain amount of correction over there, so we will continue to buy that. Again, pharma is another one. Tata Motors, specifically as far as auto is concerned. Motherson Sumi, another ancillary play over there. We also like, as far as domestic is concerned, we were somewhat overweight auto ancillary. We are kind of equal weight on capital on consumer goods, but there are selective buys over there, especially looking at companies which have pricing power. Things like Asian Paint, Berger, Colgate, and GSK Consumers. We are kind of underweight capital goods. We believe that as long as the banking sector, underweight theme plays, I think the deleveraging of the corporate balance sheet will happen, and the loan growth as far as capital goods are concerned is likely to be lower. So we are underweight capital goods, except that we like L&T, which is increasingly becoming export oriented. We were tactically overweight agrochemical themes, but given the context of the budget where there is likelihood of delayed payment, we have actually reduced that overweight to neutral, and I think that trade has played out now.
All right, fair enough, Dhananjay. Thanks so much for joining in this morning with your perspective in terms of markets and the outlook there.